We are looking at a set of financial markets that are brutal. We've got oil down really aggressively. Stock markets are falling. Financial markets don't like uncertainty. They don't know what they're dealing with when it comes to this new variant. Can you help us? What do we know? What do we need to know?
Well, first of all, I have to stress to everybody, viruses change. They don't stay static over the months and years. This virus, we know, is capable of undergoing mutations, and combinations of particular mutations can lead to the virus changing.
The emergence of new COVID-19 variant raises new concerns about its impact on the economies across the world. We can clearly see the knee-jerk reactions from the sea of red across S&P 500. The only companies that were in green are those that would benefit from a virus outbreak, like Pfizer and Moderna, that jumped 6% and 20% respectively. Overall, the US indices were all down since the release of the news on Omicron variant. S&P 500 was down 2.2%, Nasdaq 2.2% as well, and Dow Jones 2.5%. How should you position yourself in such an uncertain environment? In this video, I will share my perspective about the current situation and what we could do to benefit from it. It is not surprising to me that a new variant of concern has emerged. According to WHO, Omicron variant is the 5th variant of concern, following Alpha, Beta, Gamma, and Delta variants. Without a vaccine that can eliminate the virus, coupled with uneven distribution of the vaccines around the world, there is always opportunity for the virus to mutate to another variant of concern. In this chart, you can see that the African nations have one of the lowest vaccination rates in the world. And it is not surprising that Beta and now Omicron variants emerge from these nations. This public health crisis drags the stock market down. In 2020, when COVID-19 started to spread globally, borders were closed and countries going into lockdowns. The economy bears the brunt of these public health measures. The S&P 500 and Nasdaq plunged around 34% and 30% respectively. Tesla drops about 60% from its February high. However, if we look back, if one is able to buy the dip and has the conviction to hold till now, one would have made around 500 to 1000% returns from Tesla. To put things into perspective, $10,000 invested in Tesla during the COVID-19 dip in 2020 will bring this investment to $60,000 to $110,000 today. I am a Tesla bull and I'm currently holding 643 Tesla shares. My short-term goal is to increase my holdings to 1,000 shares. I do not have enough capital right now to buy the remaining amount of Tesla shares that I wish. But if Tesla stock price is beaten down, there could be opportunities for me to build up my holdings towards my goal. There are currently two forces as headwinds to Tesla share price. First, Elon Musk is still not done with selling his shares. A recent Twitter poll posted by Elon concluded that he will sell 10% of his Tesla shares. This would translate to 17 to 25 million of shares, depending on whether he considers his stock options, which will increase his overall ownership. Till date, Elon is about halfway through his sales. Dumping large amount of shares in the open market will inevitably create pressure on the stock price. The second headwind is due to Omicron variant. We are already seeing the negative reactions of the stock market due to this new variant, and Tesla will not be spared from this sell-down. If we go to Tesla chart, we can see the short-term support is around $1,000 and there is a gap at around $909 that is coupled with large volume. So one strategy could be to divide the entry into two tranches. The first 20% of the investable capital to be invested at around $1,000 and the second tranche of 80% investable capital at around $900. Of course, everyone has different risk appetite and entry strategy, and I'm just sharing the two price points that I'm watching closely. Crisis equals opportunity. Those who took action when COVID-19 pandemic first started in year 2020 would have reaped great rewards if invested on great companies like Tesla and or great indices like S&P 500 and Nasdaq. Given the huge growth potential of Tesla, I believe it can be the largest cap company in the world. Currently, the largest cap is Apple and Tesla is ranked number 6. Cathie believes that Tesla could reach $3,000 as their base case. This would mean that Tesla would be a $3 trillion company.
Elon Musk and Tesla. So there is a point that you would get out. I know there's a story you've talked about. You put a mark on the stock price. I think it was 3,000?
Yeah, 3,000 is our base case, not our bull case, but our base case.
Buying and holding great companies and indices could be the most rewarding and easiest strategy to apply for most investors. All we need to do is to wait for a good opportunity to enter at a decent price. This opportunity might present itself if Omicron variant truly takes a toll on the global economy and borders start to close again. Israel and Japan have already started to implement border closure. We should all stay prepared and be ready to grab the opportunity when it presents itself. Hope you like this video. Appreciate if you could like and subscribe to support the channel. Thank you and goodbye.